Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, September 19th. Stocks on Wall Street are giving back a big chunk of last week's gains, amid renewed fears about a possible Greek debt default. The European Commission, International Monetary Fund, and European Central Bank are withholding the next round of bailout funds for Greece until it comes up with a credible plan to meet its deficit reduction commitments. The country's cabinet met yesterday to discuss the situation, and the finance minister said the government takes full responsibility for the implementation of the agreed-upon program. But he also warned European leaders not to make Greece a scapegoat to cover their own inability to manage the sovereign debt crisis. Those comments are fueling a broad sell-off across the European markets. Frankfurt's DAX index and the CAC 40 in Paris are both tumbling more than 3%.
The continued problems in Europe are weighing on equities all around the world, and fears about the sovereign debt crisis are showing up in the market's fear gauge as well. The Volatility Index, or VIX, is jumping 7% today, indicating widespread uncertainty. That uncertainty is also pushing investors into assets viewed as traditional safe havens, such as U.S. Treasuries. As those prices rise, the yield on the benchmark 10-year note is dropping back below 2%. And the 2-year yield is falling to a record low of 0.17%. Meanwhile, oil prices are dropping more than $2 to about $86 a barrel. As traders try to protect themselves, they're also looking towards Washington, where President Obama is announcing his plan to cut the federal deficit by $3 trillion over the next 10 years. The plan includes $1.5 trillion in tax increases, mostly on wealthy individuals and corporations. And it does not propose reforming Social Security or raising the age of Medicare eligibility.
In corporate news, 2 companies may be merging, while a couple others split apart. After Friday's closing bell, CNBC reported that United Technologies was in deep talks to acquire Goodrich. UTX reportedly would value the company between $110 and $125 a share. Right now, Goodrich is trading at around $104 a share, up more than 12%. United Technologies is down about 1% on the news. Another big winner this morning is Tyco International, jumping more than 4%. The firm announced that it will split into 3 publicly traded companies: the ADT Home Security Services provider, the Flow Control segment, and a combined commercial security and fire control business.
Netflix is also rising in early trading, up about 2% right now. The company announced that it's separating its DVD rental service and its streaming movie service. DVD rentals will now be moved onto a separate website rebranded as Quickster, and customers will need 2 separate accounts to access both services. Along with the announcement, CEO Reed Hastings also apologized to subscribers for how Netflix handled its recent price hike. And finally, we're keeping an eye on shares of General Motors. They're dropping about 2% after the automaker signed a 4-year deal with the United Auto Workers Union. The agreement includes a signing bonus and improved benefits for employees. That's the latest from Weiss Research. Have a great trading day.